G'day. This week I wanted to talk about the prices of farming land that we're seeing locally here in the Wimmera. Now, a lot of the figures that we've seen, we've been seeing $2,000 for quite a while. We're now getting up to $3,000. I've even heard reports of $3,500. And I've spoken a lot about property prices, and that we believe there's potentially a bit of a bubble there that's been formed over time by cheap and easy credit, cheap and easy money. And I think we can start to look at farming land and start to do the figures on the land, that when people are leasing out their land, and these are the figures we look at to say, well, are these prices people paying, are they reasonable? So if someone has some farming land and it's valued at $2,000 per acre, and you can lease that bit of land out for say $100, and we know that $100 per acre in farming land is probably pretty well top of the tree of what you're going to get. If this property goes up to $3,000, or even recently $3,500, and obviously this works out at a 5% return. If you want to get the same 5% return, not 50%, 5% return here, you're going to need to get $150 per acre. So I think it's widely known that if you've got to pay $150 an acre, there's not going to be any profit left, probably after an average farming year. And obviously there's risk in taking on farming land at $100 per acre. So if the income can't keep up with the price of the land, it's there where the fundamentals have taken a bit of a divergence from the valuation compared to the lease you can get for it. So because income is one of the fundamental drivers for the pricing, the valuation of any asset. So if we all know that no one can pay $150 per acre and make any money out of it, and $100 is still an expensive amount to pay, then it's hard to justify these very high prices. So a lot of people say, well, Rob, property's done very well, and it has done extremely well. These prices are fantastic, and it gives people an opportunity that if they want to stop farming, they can sell out at fantastic prices. But it's what these prices are based on is what concerns me. Are they based on fundamentals? And one of those clear fundamentals is the income. And is the income keeping up with the price of the asset? And I would say that it's not. And one of the key drivers is obviously there's the effect where you've got neighbours around you, and to tie up a block of land that's neighbouring onto their own land makes a lot of common sense. I'd say cheap and easy money is a huge driver in terms of asset prices. If there's cheap money, it'll allow people to go and pay more than what they normally would for it, regardless of what the income is. And then I hear that some of the old cliches that, Rob, they're not making any more of it. But often I believe that's a poor excuse for making bad investment decisions. So interesting times. It's big dollars for farming land at the moment, and let's hope for our area that the droughts are gone behind us, and some good times ahead with some strong farming years, and hopefully then everyone can pay $150 per acre and the land values continue to go up. That would be nice, but I would be very cautious from here on in.